Ladies and gentlemen of the crypto space, we're live on a Monday, April 1st at 11:32 a.m. I'm defining this cycle as the acknowledgement cycle, as people, folks, markets, understanding that what occurred into 2020 leading from 2019 was structurally significant, systemically significant from an architecture standpoint. It's critical to understand what led to 2019. So it's really a full-on understanding of 16 and 17 was the bullish period, so it's the transition between 17 and 18 that's most interesting. And that's where all the weeds were pruned. And a lot of folks nowadays don't appreciate the old days, the old crypto days, 2016 and 17. It might as well have been the 1980s, but it was real. And I guess if you're 20, you don't remember though. You're 12 years old or whatever. But what am I supposed to say other than my recollection of my experiences and how I've digested what occurred back then? Compartmentalized it, processed it, and folded it into what is occurring right now. 2020 and 2021 was almost yesterday. It's strange when you look back at all of that time. Seems like a blip, and it seems so long ago, but it's there, and we're understanding it, and it was meaningful. So 16 and 17 was ICOs. And Ethereum was figuring out what the hell it is, and it was just raw ERC20s, capital raises, cash grabs, or what have you, which is those were memes. They were meme coins. If anything, it's relatively tame in the markets nowadays. It was an all-on frenzy. It makes today's frenzies seem relatively mute and short-lived, even though a critical realization is that the memes, we acknowledge that some of them become systemic, become ingrained in culture, and that's meaningful. That's meaningful, if you will. Memes were a bit around in the crypto space. 16 and 17 was an absolute frenzy. I mean, you even had memes in Bitcoin. The UTXOs and the master nodes, that was full of memes. That was the tech back then. That's what we had to work with. And it was hot and spicy and all the same shit that you see today. All the exciting things. If you go on my X profile and you see a post earlier, this boy was on fire back in 2021. He was so excited. The energy. You could feel it. Safe Moon was hot. Luna was hot in the air. Everyone was making money. People were getting left behind. Have fun staying poor. That shit wasn't invented this week, the last month, and with the meme coin frenzy of the last 2 months. You little people. That shit was hot back in 2021. Wow. And if you think this guy was hot in 2021, got even hotter back in 17. Then things started rolling over into 18, and that's when Bitcoin topped. And we started to see what was real and what wasn't. And a couple of things did stick. Dogecoin has come a long way. And it's an adoption cycle very much similar to Bitcoin. It has a different monetary policy and it has much higher inflation rates. And because of that, it's going to have a different price roll from cycle to cycle. You don't think you're going to get diminishing returns on Doge? It goes to $1, you get a couple of X on the money. So it's the same thing for the memes that prove themselves. There's no difference this cycle. There's no adoption. It was always adoption. Everything is all about adoption and acceptance by people. What is accepted by people culturally, technologically? In that regard, there's absolutely nothing that's different this time. It's so imperative to look at markets and see what is different and what is not. And that's what tells you where the opportunity is. And that's why I so often talk about 2019 leading into 2020. And that was an extremely different market in 2020. Back when Aave was lend and it wasn't used, and back when Uniswap, the almighty Uniswap that everyone knows, had less than $1 million on it. Believe that shit? Uniswap with less than $1 million? Yeah, I remember those days. I remember when Curve deployed. It wasn't even deployed by Curve. Or rather, that was the governance. The base layer AMM was deployed by them. You remember REN, BTC? That was hot stuff back in 21. Anywho, enough nostalgia, but the financial products and services that came online in 20 and 21, that we experienced the bubble. There's always a bubble. The bubble is above the average price, which falls below at some point. And that bubble occurred just like it always does, cyclically, based on the flow of capital into a market which has not infinite assets. So the capital crowds into the available assets, but then even more so, the capital crowds into the assets that are moving. Underperformance seeks outperformance, and that's why the meme coins, they get concentrated. That's why WIF is killing it, because other stuff is underperforming. Therefore, everyone just flips the bag and rotates and concentrates into what's outperforming. And that rotation will occur, the rotation out of the meme coins, just like the rotation out of Bitcoin when it tops, whenever it does, following the money, the currency cycle, top in 25 somewhere. Everything is cyclical. That is not different. The technology is different. And the technology is ingrained, entrenched. So when the capital cycles to the technology versus just the memes, it will be what is trusted most. And that's part of the adoption cycle, just as the memes are. WIF's already entrenched. It made it. And that's a big deal. And every cycle, there's going to be something that becomes culturally significant. The adoption. I saw a post the other day about the adoption, like jump on board the meme super, like it's going to keep going. Like U.S. bonds are going to demonetize into dog with hat. I mean, the naivety of that is extraordinary. It's just a statement that is. I'm not even quite sure how a psychologist would describe the statement. It's just not realistic. The expectations are uh, strange, laughable. Just doesn't make any sense. It's not the way society behaves. It's not the way capital behaves. Capital behaves based on risk-adjusted basis, based on trust, based on breadth, BREADTH, meaning at some point the moves to the upside stop going up as high as they are. For instance, I think I have WIF down here somewhere. 11% to the downside. Let's see if we can get some structure on here. That's how it's so new. Oh my God. So at some point, you get the diminishing returns cyclically, not the structural diminishing returns, as in like check back in 2028, 2032. We could see higher highs, and the odds are that's the case. But at some point, the roll happens. We're talking about the psychology of the cyclicality. Higher high, higher low, and the capitulation where it becomes lower high, lower low. And that's when you zoom out onto like a weekly and a monthly, and you see chart patterns. waves, cyclicality. There's no such thing as up only because everyone's going to want to capitalize at some point. So that cyclicality will occur. This is why we talk about don't chase. You don't need to chase. Everything will roll to where you are as long as there's a reason why it should. And that's why the technological infrastructure, the entrenched infrastructure, gets the bid. We'll get the bids the way it works because it's significant infrastructure. It's significant fintech infrastructure. There was no fintech infrastructure in 2017. It was all memes. And you started to see what some of that capital raise was capable of heading into the end of 2017. And then everything that didn't have a chance of materializing into a technology in 2018 evaporated. The underperformance of those assets, everything was sold and concentrated into what remained. And you also had capital flight. Capital flight was different back then because it was all capital and centralized exchanges. There was no DeFi. This didn't exist. None of this existed. So in 18, you took your capital, your dollars out the Coinbase, and what are you going to do with your dollars if you're not buying crypto? So when it expatriated these markets. The exogenous capital went bye-bye. That's a big thing that is different this time. Jumping around, it's like a movie where you're looking at the present, the past. And this time, capital flight went to stablecoins. And we see that in the data. It's just not really debatable. It's quantitative. And why don't I have DeFi Llama? I'm not going to go. I'm going to keep telling the story. But on DeFi Llama, you see how many stablecoins remained in 2022. End of 2022, where it bottomed, there was a lot of stablecoins. There was billions of dollars. But all of it, at the end of 2019 to 2020, was $1 million or less. There was a time where there's thousands of dollars in stablecoins on Uniswap V1. Look where we've come. This is the acknowledgement cycle. After all this technology was introduced in 20 and 21, there were the things that remained in 22 and 23. And those things become culturally and technologically significant. Credit, foreign exchange, derivatives. You don't think you're going to have derivatives of meme coins? You don't think there's going to be some protocols that start to accept that stuff as collateral for credit and leverage? You don't think you can have the online, the on-chain perp dexers offer perps for these products, the derivatives? Of course. So the protocols that are consumed is the market telling us which ones are the significant products. The market always tells the truth. It tells us what is desired, what people want to use, what are the significant protocols. And for all of 2024 and frankly all of 2023, the market has been screaming what it wants. Clearly wants foreign exchange. That every one of these topics is granular. To understand foreign exchange, you have to understand the history of Uniswap. You have to understand where Curve came into the fold. You have to understand the protocols that have iterated beyond Curve. Andre's tech and the Solidly tech. That's pretty popular nowadays. That wasn't so popular in 2021 when it was launched. That kind of burned a lot of people. But nowadays, all the new people, all the new retail, they have no history and no knowledge of that. All they see is Theta, Velodrome, Aerodrome on base. And they have no history and knowledge of Andre and what he did, for better or for worse. They just see it as a protocol that has incentives that are aligned, better aligned for owners as well as liquidity providers. That's a big deal. Big tech. I always thought Andre's tech was big. And at this point, I think that is a reasonable statement to make. And everything I say, I think through very well whether it's reasonable or not. Otherwise, I won't say it. It is very reasonable to have exposure to solidly forks. Now you're going to have competitive solidly forks. There's plenty of competition trying to come online, and in that regard, you look to data. You got to look to the data. You got to look to DeFi Llama to see what's doing the best, what's outperforming, because the market is telling us where the capital will flow when exogenous capital flows into the system and when endogenous capital is created from within the system. When the leverage comes on and the bubble starts to form, there's no bubble in the markets. It's uncharted territory with the meme coins. You don't have a history, so you have no sense of structure. There's always structure, always, no matter what an uh, enthusiastic, passionate, energy-filled person says, there's always structure, because all of this behavior reduces to psychology, the psychology of markets, how people respond to incentive systems. As I've said, everything in life can reduce to an incentive. Find the incentive in everything. So the incentive from a meme coin is that it's potential capitalization, if not actual capitalization. So if the roll happens, and it's lower highs and lower lows, that's self-reinforcing that capitalization is increasingly unlikely, because it's probably going to go lower for a period of time. And that causes it to go lower for more time. The cyclicality of markets can't fight the market. Come on, everyone says don't fight the Fed. Don't fight the market. Just listen to the market. And requires understanding the market, understanding just even the basics of the psychology that goes into how people engage with the market. Anyway, that's the story we tell. The technology, the psychology, the cyclicality. And it gives us our edge. Our edge to what? Survive. Because when the exogenous flow happens, it's going to happen. It's a big deal. And things reprice significantly to the upside. And you don't have to get caught up in the hyperbole of the meme coins. You should own things, and you can own things, hopefully, using rules at an opportune price point. Respect position size, respect portfolio composition, and you can buy meme coins just like you buy anything with extra capital that you have in a bank account. But you don't empty your bank account. That seems unreasonable. But you can buy meme coins if you have an extra 10 grand in the bank account because you have the $200,000 portfolio and you make 10 grand a month. What do you do with the 10 grand a month? I mean, you're probably working, and most, hopefully, if not all of that 10 grand is for reinvestment purposes, and maybe some of it's for paying bills. You take 1,000. Whoopie-doo, it's from monthly revenue. You take 2,000 and you buy things. And how do you engage with buying things? What's the risk profile? And in this type of market, all right, you take some risks, you lose the money. You don't lose the whole portfolio. That's some fucking crazy shit. It also depends on your age. When you're old and you have kids, you take less risks, and you don't, hopefully at that point, you don't need to take such risks. You don't need to gamble as aggressively. But you probably don't need to gamble as aggressively in your youth as well, because now you have time. Just like I remember, I worked my ass off in my 20s, and I hated every minute of it. When I moved out from my parents, I think I had like 100 grand in the bank. I was a very different kid. You listen to very different stories. You got to deal with me telling you that I was a very different kid, not the normal kid. I had savings, living at home. That's the whole point of living at home. I didn't go out. I didn't party. I didn't do things. I always thought, work hard now, play later. And now I get to play later. I'm very comfortable because I made those choices to sacrifice time, and now I get to relax and talk with you guys. I wish I could talk with you guys more. And I have a feeling I'm going to be able to. This is the next year or two. If I could put my brain on a projector and illuminate the path that I foresee, there's a high likelihood that that's the case. That I'll just be able to talk with you guys maybe on a daily basis again, because that's what I enjoy the most. And I think that path is exactly where we're on. We look at the macro, I see it, and I see the trajectory, and that's just what I foresee. Tapsy's in the house, a pleasure. Athletic concept. Hey, coach, great weekend to the family. Very important. Yeah, it was a nice weekend, Easter weekend. It's a good weekend. It's imperative to, like years ago, it was impossible to get my mind off of markets. You always felt like you're missing an opportunity. But I promised myself in 2022 and 2023 I was going to restructure the portfolio to such a degree that, yeah, fine, I'm going to miss things, and that's okay. And now that is what how I operate. It's okay to miss things. And the reason why it's imperative to train yourself to be like that is because it's contrarian. If you're feeling like you're going to miss things, FOMO, that is not the way to feel, or at least that should be a goal to train your mind and your physiological response to that is wrong. It's the opposite of the way you need to feel. You need to be calm and rational engaging with markets. And this is the methodology where the vast majority will succeed. I'm clearly not talking to a group of folks that want to engage aggressively, want to have high anxiety, want to be frantic and exuberant and excited and energy and family and winning. Maybe not the family part, but like the whole family of a community. That's actually an interesting topic. Let me just highlight that. The whole community of people in markets. That's so bad. From a financial perspective, the most important thing to understand about financials is it's a personal experience. And the only person that matters is you. That you gain, that you extract capital from a capital gains perspective. And from an investing perspective, that you own the right things. But it's about you. It's a personal experience. There's no community. Everyone doesn't win. That's not the way the world works. This is you get what you get, and you don't get upset. That's what they tell my kids in elementary school. And shit, that's more applicable than ever as adults. You get what you get, and then you get it and you hold on to it and protect it and use it as a resource to take care of yourself, your family, and get more. There's no community. It doesn't exist. It's not natural. And bear in mind when I say not natural, a lot of things that are like natural aren't fair. Darwin isn't about fair. It's not about equal opportunity. It's about frickin' survival. Either you're gonna die if you don't protect yourself. Darwin. So that's the manifestation that humans created in capital markets. You either make money or not, or you're fucked. So don't lose your money. Protect your money. Make good decisions, because no one's going to look out for you, and someone's going to take your money the second you stop protecting it. This isn't fair. It's not meant to be fair. So don't treat it like it's supposed to be community. I always get a chuckle, or I always observe that in markets. Oh, strong community. It's just not, it's not the way it works. Always remember that. Getting in live again, Leandro's in the house. Raul, hello. Lucian, good morning. And whoever's on YouTube, throw your comments. I hit all comments. I respond to all comments. That's the way we do things around here. Meme dump is going to be spectacular. Yeah, but it can do well. Plenty of meme coins will continue to do well, and that's okay. And you're going to see a lot of hyperbole, and you're going to see a lot of opinion, and this super cycle is upon us, and this great everything is probabilistic. There is a probability that dog with hat becomes more popular than Bitcoin. And the point that's the point I always try and make. Everything boils down to data, and the markets tell us the truth. If that happens, the markets will tell us. And you won't know that that's going to happen, and it will happen over time. Now, you can laugh at that statement, but it's a true statement, and that's like the whole many worlds theory from physicists and infinite dimensions and whatnot, and everything that can happen does happen. So in some universe, dog with that overtakes Bitcoin and becomes the global reserve currency and the supreme pristine collateral. As insane as it sounds, there's a probability that it occurs. It just is what it is. So everything is odds. And that's where diversification and concentration come in. I mean, what's the next exchange to be bigger and more popular and do more volume than Uniswap? Plenty of probabilities that some of these newer technologies do that. But historically, that doesn't occur. Historically, what is outperforming continues to outperform, continues to retain market leadership position. That's just what history tells us with regard to business and technology. And inferior technology is often not replaced by superior technology in any short order. History rhymes throughout the ages. Doesn't repeat. Very common thing everyone says. I am Dean in the house. Much pleasure. Hey, Cap. Um, the meme dump, I read it and I responded, but everything is memes right now. And I like this season because it tells us a lot about society, the state of things, what people are interested in, social cohesiveness and potential disorder on the horizon. And I think it gives us a good sense of where we are. And as much as there's great opportunity, if you have that kind of mentality, and that's cool. There's plenty of people that make a fair amount of money. Capital management is more so about keeping money rather than making money. And the time when we get to see who makes the better decisions isn't now. Isn't the making the capital. It's at the end of 2025, 26, and when we have a liquidity event, when the regional banks start cascading, if they do, probabilistically speaking, if there's a geopolitical outbreak, a ballistic event, that type of conflict, if there's a disruption in supply chains, that's when you see who makes the good decisions, not when markets are outperforming and different types of assets are outperforming. At some point, all of it goes ballistic. The meme coins, yet again, maybe things roll over from the meme coins for a little bit. They cool off, 10, 20, 30% comes off the top, a lot of froth. Bitcoin retraces to 60, 65. And then China's fiscal stimulus finally kicks into gear, albeit they have historic fiscal stimulus going on, and they brought QE back into the fold, and they're still having trouble with deflation. At some point, they probably gain traction. And then everyone gains traction. And then all markets go parabolic at the same time. And that's not when you get to judge people. You get to judge people when everything's falling apart, not when it's going ballistic. Where can I find data? And how do I analyze valuation and flows of Hero Protocol? A lot of speculative. I don't have the data, but every once in a while, Hero um, does post it. Most recent data, and the data is intriguing. Now, when I say intriguing, I'm not speaking from a couple months standpoint even. My mental projection goes out years. Most of my mental state is operating in 2028 at this point. So everything's probabilities. Does Solana and the froth, it looks like a lot of it already rolled over into base. And at some point, no one said Solana was going to top, and the meme coin frenzy was going to keep going. The super cycle rotated the base, probably rotating a degree to the Gen chain. It'll keep rotating, and that's the hot ball of money we talk about. So I think, much like other macroeconomists, I think Solana is very interesting, and I think it has a product market fit into a high performance chain, and there's other high performance chains, but look at Solana, where it came from in 2020 and 2021. It has its spot in the queue of lendiness. It's building trust, and it's been building trust for years. I mean, there was a time when Solana went down very frequently, much more than Blast. And it doesn't anymore because the software is getting better. And it's going to continue to get better. And capital and the friction for getting capital in and out will get better over time. So the activity on the network is going to be healthy in and out. The flows, the opportunity will be exploited. So that's my general sentiment for Hero. It's not a cash flow, very cash flow positive protocol compared to 20, 30, 40, 50% returns, 60, 70, 80% returns. These are massive numbers. And it's not the gambling numbers, $100 into $1 million. That's not the point. That's not capital management. That's a gamble. It's a speculation. At least compartmentalize this season, folks. I have this guy up with the energy, almost the entire stream, because that's such an expression of so many people's sentiment. Have fun staying poor. Sidelined. You're hating because you're sidelined. Who the fuck is sidelined? I got everything. I've been there, done that. Portfolio is healthier than it's ever been. Cash flow is up 100% year over year. They're making money. They're making me money. Different type of money. Less money. And they're going to say, oh, you don't have any balls. All right, I got bills paid. I take care of my kids. I pay their school. I could pay for private school. Do many things because they're working and they're doing what they're doing. Many are outperforming. Many are making those millions and multiples. Most lose. Most always lose. It's the nature of financials. And as they engage in that activity, I capitalize on that activity. I'm that guy behind the scenes, the facilitator, a middleman of sorts. It had a distinguishing business model, and there's nothing useful in DeFi Llama. Yes, that's right, Leandro. There's not much data, but try and find the protocols that are building on it. Probably the most interesting one that's up and running. There's a bunch, but Perpdex, gambling speculation. They're in closed beta, I believe. What happens when they go public and the protocol becomes trusted and it builds momentum and capital flows into the protocol? I mean, it's what I look for is the structure in markets and who's going to reap the most benefit from downstream behavior. I mean, Pepperdex alone could be a massive, massive revenue source for Hero and the tokenomics, because all of the tokenomics of Hero is designed to drive revenue to ESHXRO. And literally stablecoin, USDC revenue. Literally the structure of the protocol. So what are the conditions where those stablecoins go up and you get more of them? When the downstream protocols start piping the stablecoins. So when? When the protocols mature and and over time. So time is a hard thing, especially when you see things going 10,000% of the money, 100,000% on the money, and you're sidelined from those gains. You don't have to respond um, disappointed to being sidelined. Being sidelined means you're not participating. Are you okay with that? For me, I am. Because while sidelined, all I do is mentally visualize the trickle of capital inflows because of that behavior. And that trickle, with the size that I have, is not just a trickle. It's full business. So that unto itself is a goal to attain that kind of size where it becomes a full business. And set your goals accordingly. Do you want to be a gambler or not? And I don't want to. Anyway, that was a couple of different thoughts. I hope that was relatively useful. IMD, my thought around, I should be using this feature more. Boop. My thought around memes is in general, Gem Pop don't understand finance and how money works. So number go up and dog token fits their sphere of awareness, which is okay. That is a very reasonable statement. Of course, do you know, well, of course you do know what it takes to understand the way the global financial system works and all the data that we look at. It's a big deal. I mean, there's big macro going on right now, what gold is doing. I don't have, look at that gold rip up to, that's a $30 candle on the daily. Something structural is going on in global financials. Big actors, the countries are required to make a wick like that. Countries, not people, not banks, countries. And there we go back to 23. That is a monumental candle. And the fact that we've broken out past it is confirmation that countries are doing significant things. What countries? This country, Japan. Frankly, European Union is just broadly deflating and demographic collapse. But look at these countries. Japan has been in demographic collapse, and China overstated everything for decades. And they're in deflation. Everyone's trying to fight deflation. So how are you going to fight deflation? How do you fight deflation? I mean, Japan's got a little bit of inflation, but they got a whole fiscal shit show with the amount of debt that they have. But to fight deflation, you print, you debase, you debase. And that's why U.S. markets are going up, because everyone else is debasing. And if everyone else is debasing, where's the capital going? It's going from underperformance to outperformance. If they're printing, and the systems are flush with liquidity, and the assets in those respective countries aren't appreciating, the capital doesn't go to what's not appreciating. The capital goes to what's appreciating. The capital goes to what's outperforming. The capital goes to the global meme coins, U.S. markets. You get it? You get the U.S. markets, U.S. equity markets, NVIDIA, Microsoft, Apple, Amazon, they're meme coins. Because if they weren't meme coins and they were priced based on earnings, you'd have P and E's that were more rational. And you would have the conversation about like Buffett originally talked about, where you own stock, you own a company, but not at these P's and E's. Not with the amount of stock float that you have out there. You don't own shit. You own an instrument that goes up and down in price. You have no governance power. You have no cash flow. You have a meme coin. So the meme coins that are $1 trillion versus the meme coins that are 200 grand, 500 grand becoming a billion. Where do you get the multiples? The multiples with the cheap meme coins. WIF at what, 4 bill? What's WIF at? WIF has a hell of a market cap right now. I think it's 4 bill. I think it passed Arbitrum. Hell of a market cap. It's zero. 4 billion is zero in global financials. You gotta digest the scale and scope of all of this stuff. Otherwise, you're going to be susceptible to the stupid shit that people say in social media. 4 billion is 4 billion, zero in global financial terms. Bitcoin is relatively zero in global financial terms. Tiny, tiny stuff, which is, I think it's bigger than silver right now, which is still tiny, tiny stuff. But silver isn't hoarded like gold is from a nation state perspective. It's not defined as a nation state means of exerting financial power. They use gold. Gold is significant in that regard. So that's why we're seeing these funny moves in gold prices, and other precious metals don't have the same movement, volatility. That presents an asymmetrical opportunity to own cash flow assets. So yes, I think at some point everyone wants to grow up. At some point, here's a common statement that a lot of folks that engage with meme coins aggressively say. At some point, they're tired, and I have over the years kept close with interesting groups of people, and one of them is a group of people that have been doing this since the early days, 16 and 17 meme coins. And a common thread in our recent chats is they're all tired. It's exhausting. And I'm just me. And how I say is, yeah, I'm always tired. At 40 plus years old, I don't want to be doing that shit. I just want to click a button. And that's what I wanted to do in 22 and 23, is to restructure what was achieved in 20 and 21 into something that in future cycles, all I had to do was click a damn button. And that's a much more reasonable old person goal than chasing hopes and dreams of meme coins and having no financial capacity to manage the winnings in a sustainable way. Having a bank account just filled with cash doesn't melts at 15% per year. Come back to the whole Bitcoin narrative, and a much more robust way to think about capital. If you talk to any very wealthy person, it's not cash. Net wealth isn't cash. It's land, but it's businesses. And most importantly, it's fucking cash flow. Fuck you, pay me. This is the wealthy and why they're wealthy. That's it. My pinned tweet, and it's probably going to remain my pinned tweet. That's it. Pay me, you do the work. It's kind of a simple equation that makes a fair amount of sense. But the question is, how do you achieve that? What businesses? What are going to outperform in the future? Going to make more revenue in the future? And that's it's a very difficult thing to find out. It requires understanding global financials, how money works. What is money? Dollars are sure as hell not money. Did you know that if you have two commercial banks in the U.S., HSBC and Chase, just brand names, one bank can borrow from another bank, and then that bank could lend it back to the original bank And doing so, that original bank, poof, made money out of nothing. And that's in good part probably where we're heading with regard to the United States fiscal situation and how they're going to handle the $10.8 trillion flood of treasuries that need to get issued this year. And the speculation, the talk of the town, is that the Fed isn't going to do traditional QE. It's not going to go on the Fed balance sheet. It's going to go on the commercial banks' balance sheets because the banks have a capacity to print money, to print liabilities, dollars, using that methodology. That's how they manifest dollars. That's real. And that should give you some serious insight into the potential significance of these crypto markets. What is a stablecoin as compared to a bank dollar? And you could get bank dollars, a deposit that isn't a dollar, it's a deposit, is literally accepted as payment. That statement unto itself should tell you some crazy shit about what's going to play out with these crypto markets and stablecoins, and how these systems have a capacity to print dollars that are very much like commercial banks, but quite different. What is the same and what is different? And stablecoins are much more powerful than bank dollars. Much more powerful than bank dollars. Um, Gabriel's in the house. Hello. Tab C, community is like saying a work is a family. You can be close with your colleagues, but in the end, it's coming and going based on external factors. Now, I've been a software engineer for 15 years, give or take. Originally, the sentiment is you join a company and what? You get promoted, you get raises. That's not the path that I chose. I enjoyed every colleague I worked with over the years, and I was saltier when I was younger, and I got less salty as I got older. And now at this point, it's business. It's never personal. You must digest that statement. Now, I enjoy all the colleagues I work with right now. I consider them friends. I've considered all my colleagues friends. It's business. It's never personal, and it's about you. And frankly, in a very real sense, if everyone behaved like that in their best interest, collectively, good things should happen for an organization because everyone's trying to do the best they can do for themselves. And therefore, if everyone's trying, the best work as well, because that impacts themselves, impacts your resume. And that means the business is going to be healthy because the individuals are healthy. So, it's not a negative thing necessarily about that quote unquote selfishness. And this is a very philosophical topic that Ayn Rand talked about a lot, and the virtue of selfishness. And maybe I misquote in some regards or misexpress in some regards, but I think that it's a reasonable perspective to have. Everyone does well for themselves. A collective, an organization will do well also. Anywho, but you're right, Topsy. Very right. Asher, there are so many narratives right now. Severance, Pepe Ito, are serious mev bots, trading meme tokens, flash bots, and Manifold is big tech. Sandwich trades push the profits back to Pepe Ito and Severance. Yeah, of course. It's big stuff. Some of the big narratives are like Deepin AI, getting block formation to get around MEV and make a more healthier market. So generally speaking, I compartmentalize these narratives into time frames. When are they likely to be productive? And what is the scale and scope of them? Now, AI and Deepin and block building are massive, massive businesses. I can't get over the fact that the biggest business on the planet is dollars. Every dollar on the planet, the dollar that you have in your pocket, the dollars in your bank account, there's an interest rate associated with them for them to continue to exist. Maybe not the paper dollars to the same degree, but the value of the paper dollar surely is dependent on the interest rates being and the interest being paid for the other dollars to continue to exist. So maybe you don't see it because it's a paper dollar, but the value of that dollar is very much dependent on that interest actually being paid. So the stable coins are the biggest business. Nothing even comes close. So as much as I understand AI, of course, I use it on a daily basis for work, and DeepIn's big deal. In the end, that disrupts development, software development, that disrupts cloud compute, and that disrupts cloud storage. AWS, Azure, biggest cloud systems on the planet. It's a big deal. Being able to execute Python on chain, an Aleph or a Cartesi. It's big tech, massive tech. What's the time horizon? And where's the cash flow? That's why I always say XYZ. Pay me now. Because if it's paying now, and it's deterministic, it'll pay in the future. And what are the odds it's going to continue to pay? So stable coins and Forex is where I rest comfortably, knowing that these systems are a much bigger business than any narrative that anyone could potentially talk to me about. Stable coins and foreign exchange are the biggest businesses on the planet, bigger than block building, bigger than AI, and bigger than DeepIn. That's it. There's not much else that can be said other than that. Obviously, has to be the case. It's the banking system. Hope that helps. Lake Meadows, peace, Noah. Just wanted to get your thoughts on what's next for crypto markets. According to the chart, BTC ended March above 69. Everything's taken a dump today because look at the dollars on the bond market. I mean, DXY over 105 is making a hell of a statement considering it's the high for the year. DXY just ripped to a fresh higher high for 2024. And that's going to get a lot of countries in a frenzy. It's getting the U.S. Treasury market to sell off 2.97% on the 10-year. That is pretty much the highest rates for 2024. Let's see if it prints a fresh higher high. And that's obviously, these are being sold to buy dollars. That's why dollars are above 105. And the yen is still on the ropes, 105.69. This thing rips to the upside, and countries are going to be in a frenzy, and we're going to have some volatility, serious volatility. What's remarkable, this has yet to respond. 2.97%, 3% on the 10-year. I expect a nice pop on this. And we'll see how the efforts of sovereign nations, of these nation states, to collude geopolitically to smooth the business cycle in their Keynesian fashion, how successful they are, how well they do in managing this financial construct. Because of any time in history, now more than ever, this is a completely managed financial system, managed with regard to pressures in bids and asks, in the Treasury market especially, which bleeds over to bids and asks in equity markets, because if equities roll over, there goes retirement crisis. Anisets in the house, much a pleasure. MN, the issue is not Genpop's understanding, it's their reluctance to touch risky assets like Bitcoins. Also, remove the hurdles of entering a trade, and we would see much more volume than we see today. Sure, less friction, more volume, more volatility. And then it gets more robust there. The conversation gets more rich of what is beyond just capital gains. What is the rationale for investments and so on and so forth. I mean, if you're talking about VC, they're not investing necessarily in meme coins because that's, if anything, fits the definition of a cash position, because that's the only thing you can do is sell something after it goes up in price. You're going to have to sell it. That's capital gains, just cash, which is basically just spreads What's going up? What's hot? And just riding the volatility up and down. The only other thing from a financial perspective is investment. Investment for what? ROI, APR, over what time? What's the ROI? VCs want a decent ROI over a reasonable period of time. So you have to understand the way business works, the way financials work. If you're going to sustainably engage with these markets in a non-shallow fashion, oh, you're going to get left behind, bro. Oh, you're not in on this shit. You don't got the hot meme coin. That's all there is. When are you going to realize that all it is gambling? No. Of course, there's a gambling component to investing, but that's more like a statistical thing, a speculative thing. But there's actual properties and attributes of these investments that are very rich compared to what is a culturally significant meme. I'm the last person to diminish the significance of these cultural trends and the rise of these meme coins that will have lasting impact on these crypto markets from a volatility as well as likely a collateral perspective at some point. Leandro, you're very welcome. Always a pleasure. Let's see if I get the rest of the comments. Whoever's on YouTube, throw some comments. Let's keep this party going. I'm going to run down the list. Buying FXS, now at $7. Do you consider it a premium? The data speaks. I do not speak. Zoom out to the monthly. I mean, frankly, this looks like a massive triangular compression since inception. You're from a monthly perspective in pretty much fairly priced territory. Let me show you what I mean. This is Frax, and then you can turn off everything. This is the whole Frax chart. You're at a discount if you're in the red more or less, if you're below the red from a spot price perspective. So it's heading into discount territory. It just is what it is. It's a quantitative statement. It's not an opinion. But it's mostly fairly priced. No froth, no exuberance, there's no bubble, but clearly they make like 67, it was a 40 to 80 million dollars a year. So it's very interesting. It's a very profitable business. They own a lot of collateral and liabilities. They make a lot of revenue from those damn stable coins. Big business. So what happens when they're making $800 million a year? And $800 million a year from a banking perspective and a stablecoin perspective and a volatility perspective of these crypto markets and how much revenue they could potentially produce. $800 million a year seems pretty tame from a speculative standpoint. And that's not even like opinion, that's just a reasonable statement. My opinion is I happen to like the brand. And isn't that what the guy from AMC, from GameStop said? I like the stock. I like the FXS stock for a variety of very rational reasons because of what business they're in. Hope that helps. The bad guy. Good afternoon, Cap. Base gaining some serious momentum. What are the most important protocols on base in your opinion? Aerodrome. I mean, that's it. I would love to have a landscape that was more rich. I would love some base exposure. I'm probably best thing to say is I'm seeking base exposure, albeit I'm not too sure where everything settles in the future. For instance, if you have optimism exposure or optimistic super chain exposure, any of the optimistic chains, which literally includes Fractal, I guess it's all interconnected because optimism gets the revenue and then it has the grants and the cap and all those incentive programs. So a lot of that's going to go to Fractal. They carry a huge amount of weight with regard to financial activity. So in this optimistic superchain, everything benefits everything. So we indirectly have base exposure. Chains. If we go over to base, Uniswap, as much as everyone thinks Aerodrome is the center of everything on base, Uniswap owns it. I mean, Aerodrome has 530 mil, but if you go over to volume, it's pure Uniswap. And it's not even close. Like Uniswap just owns base. Like to the point where it's almost like Velodrome. Velodrome on Optimism. Like Velodrome just owns Optimism by 3 multiples, and it's even more on base. It's Uniswap owns it by 8x, 6, 7, 8x, whatever that spread is. That is a big spread for Aerodrome to catch up to Uniswap. And what's interesting is Aerodrome is a high capital efficiency protocol with concentrated liquidity and stuff like that. But Uniswap has a 2.97% volume to TVL. I have a feeling some, like Velodrome slipstream needs to get ported over to Aerodrome, and the concentrated liquidity tech that they worked on, and down the list there's some room for competition. Maverick, they focus on concentrated liquidity, and they're clearly doing some wicked numbers, and obviously solidly as well. Sarah's done a lot of work on transaction efficiency, and this will adjust. But the odds are Uniswap remains dominant. Does what's in the lead tends to remain in the lead. That's just the nature of markets. Let's look at Arbitrum. Uniswap in the lead significantly. Camelot with Ramsey's trailing, and Trader Joe has perked up at times. I've seen it at 50 mil. Very interesting. Look at the volume to TVL. Ramsey sitting at 2.08%, significantly higher than Uniswap. Data. Data drives our activity, and I make choices based on data, and that's why I made this choice for Ramsey's exposure on Arbitrum. I would love base exposure. I would have loved to have Aerodrome exposure. I cannot have the price point I want. That's not have fun staying poor. That's not I'm sidelined. I am sidelined. That's I cannot own the quantity I want to own to create a portfolio position that is effective to achieve my goals. It would be counter-effective because I will have excess diversification into a protocol that produces the same APR as everything else. If base turns into $10 billion and Velodrome's still producing 20, 30, 40%, what's the difference? It'd be nice if it was at a discount. I don't think we're going to get discounts on Aerodrome. I mean, I did a tweet like, who bought Aerodrome at $2? And I'm sure that annoyed a lot of folks. And that was definitely a tweet that qualified for, oh, have fun staying poor. I'm sidelined. Yeah, okay. It's at $1.33. Am I going to get a discount to the price that I would need to be able to acquire the position I want? Probably not. Probably not. It's at half a bill market cap. I don't even want to buy it if it was I would want sub 10. It's never going to happen. It's just not going to happen, and that's okay. I can't do anything about it. I can't make it. I can't force acquisition at the price I want. But I did find Ramsey's appealing because it's at 5.65 mil. Oh my God, it's literally 100x. This protocol could go 100x just to catch up to Aerodrome, which is the same protocol, to such a degree that Velodrome, Aerodrome, and Ramsey's are all talking, and they're all working together nowadays. Except this one is at 1/100th the market cap. On a network, I mean, it's just this is what I look for in markets, something that's mispriced. And then you go to volume of 427 mil on Arbitrum versus base is 599. So look, it has a comparable volume, like 80% the volume of base. And then if you go over to stablecoins, base has 1.17 bill versus Arbitrum, which has $3.4 billion. I think it was a very obvious decision uh, to, to acquire that position when Ramsey's was at a mil market cap. Is that a mil market cap? Oh my God. So, I mean, the data still supports the position. Pretty interesting. Um, let's catch up. Where was I at? Having an opportunity to own infrastructure on base seems meaningful. Looking forward to a couple of years. Of course, onboarding liquidity to base is very easy for the average retail user. Guess what? It bleeds over to everything. Everything bleeds over to everything. This is an emerging market of emerging markets. The capital flows. Capital flows everywhere. The capital is free to move, and there's plenty of cross-chain. Stargate is right there, and just capital is very permissionlessly free to move. So as much as I want exposure, if I can't have exposure, it's not up to me. It's not up to me. The most important thing you do is not force positions. You can't force a position. You either get a freaking deal, you either get a discount, or you don't get a position, and that's okay. Excuse me. Gabriel, hey Noah, what do you think about the new changes on Ramses? I think they're making very constructive changes. Bear in mind, it's a very mutable protocol, so it fits into a very different conversation as compared to immutable protocols, which is meaningful, and it's important to respect position size in that regard. But generally speaking, I think they're making very opportunistic changes. I think they're a very astute team. They were very opportunistic coming online when they did. It's a very competitive landscape post Solidly V1 launch, and the market. A lot of people hate. I'm the anti-hater, and Andre has and had brilliant ideas. Probably wasn't. His statements were everyone engaged with an untested alpha release. He deployed the contracts and people were aping the contracts before the UI. And I could appreciate that in some regards from a developer perspective, like test in production type shit. But it probably wasn't the best thing to do from a PR and market opinion standpoint. And whatever, this market has the memory of a goldfish. Do you think anyone engaging on Velodrome, uh, transferring capital from Coinbase, knows jack shit about Andre? I'm sure they don't even know his name. That's it. That's it, period. There's no memory. There's goldfish, goldfish, goldfish. That's why we talk about 17 into 18 and 19 into 20. You need to understand the history of how we got to where we are, students of history. I know it's recent history. A lot of these macro folks are about 100 years, half a millennia. Gail's in the house. Much pleasure. Welcome, welcome. No boost on pools and no XRAM anymore. Yeah, they're trying to create less depreciative pressure, more aligned incentives, and I think they make good choices. And in the end, what you do in production is you make choices and changes, and you measure the result. And I think data-driven development is a big deal in software engineering, and I would like to think that those were data-driven modifications. Tapsy, by the way, nice upgrades to the stream with the generated backdrops, highlighting viewer comments like this. Oh, thank you. Try my best. Try my best. This old guy needs to keep up with you young hipsters and your dog with hats. and the Gen Chain and D-Swap. I got those charts up here. I got the Gen Chain going on. I follow the volumes. I'm following the volumes. D-Swap fully diluted value 13.4 mil, down 21%. I mean, this thing ripped, 1,000x for people already. And some people would argue like 13 mil. It's too high. For me, I don't see the opportunity. For me, and it's all meme coins, obviously. That's what the network is. D-Swap has staking live. Eh, I don't know. I can't buy it at 13 though. I just don't. I can't buy a big enough position. And bear in mind, look at that volatility. It's crazy volatility because the Gen chain, of course, is going to be freaking volatile. So it's not necessarily something I want sizable exposure to. Interesting stuff though. L3, very interesting. That's what I said. You're gonna use uh, Arbitrum for transactions and Base for finality, and then the other chain for DA, the data availability. It's very interesting where things are heading. Um, let's do the 0xCGN. What do you mean when you say acquire a position I want? Is it percentage-wise compared to max supply? Okay, so that's part of the equation. With regard to meme coins, shit, I want to own 1% of supply. And if I can't own 1% of supply, I either don't have enough money or the asset has too high a market cap. I mean, doesn't that make sense? If the folks that turn $1,000 into $10 million, they got at a very good market cap where their $1,000 was a lot of supply. And then the market cap adjusted going forward. So, I mean, it's literally just right curving the shit out of meme coins, which is left curve field. But you can do that, and that makes sense. To be that person that turns $1,000 into $10 million, you need to own a shitload of supply. 1, 2, 3% of supply, 5% of supply. So that's certainly part of the way I think about these markets, and especially the case with regard to cash flow positions. If I don't own not necessarily a meaningful amount of supply, depending on how strong a cash flow business is, XYZ comes into the fold. How much does it cost? How much is it paying? And how likely is it to continue paying? And is the cash flow proportional? Or what's the correlation to the asset price? So for instance, if curve goes 5x on the money, it doesn't even get to all-time high. I often talk about this comparison. This curve is one of the most hated price movement assets in the entire crypto space. Let's say it gets to $3 in 2024. And the volume on Llama Land and CRV USD is cranking out 20, 30%. Oh my God, frankly, if it's 20, 30% on just base VE revenue at $3, Papa gonna get not a brand new pair of shoes. Papa gotta get a new car. That'd be crazy. So what kind of position size do you need to do that? So position I want to own positions where either X, Y, Z click, or I could own a meaningful percent of supply from a capital gains standpoint. And if I can't, I can't. It's not the narrative that necessarily drives the investment. The narrative tells you where to look. The investment has to make sense. Due diligence, which means look at the numbers, look at vested interest. It's so imperative to look at who the hell you're investing with. Are you investing with people that have literally no risk management methodology whatsoever, and they don't know anything that they're doing, and you get volatility like this shit, the 13 mil, 20% volatility. Oh my God. Know your investor, know the landscape. You have to know what you're getting involved with if you want to even attempt to protect capital. Hope that helps. Lake, you've mentioned before that you established a trust to manage your finances and assets. I'm interested in restructuring myself in this manner, primarily For taxes, can you recommend where to start? ChatGPT or Claude. Talk to it, ask it the history of these structures, and think in terms of a business, and think of it in terms of what the business is. For instance, if you're in the manufacturing business, clearly the expenses are manufacturing related, and those are potentially your deductible items as they're related, depending on how they're related to business activity. So think of it with regard to a trust for children. You can't just create a trust for yourself. You can, but is that a business for yourself? That seems self-interest. The whole point of a trust is something is in trust for someone else. So you're acting on the behalf of someone else's interest. And when it comes to children, that's meaningful historically. As a parent, if you're in trust, if their assets are in trust to you and you're doing things for their best interest, history is on your side with regard to financial maneuvering, financial choices and decisions, because you're not doing it for yourself, you're doing it for someone else. So things with regard to deductibility and reporting and how those things coalesce into taxable obligations, there's meaningful implications to that, just as there are with corporations, LLCs, S corps, so on and so forth. A whole different conversation to be had about each of these structures with regard to reporting requirements. Corporations tend to have public reporting requirements, which seems pretty uh, unreasonable for what most of us do. I think a trust makes a lot of sense. Now, bear in mind, lawyers are a pain in the ass. Lawyers are very expensive. So, but ChatGPT, you can ask any lawyer question you want and have a conversation. The first step to doing anything is to always have a conversation, to have knowledge. Now, fortunately, you can have these relatively rich, sophisticated conversations with artificial intelligence nowadays. You literally have a conversation with a pseudo lawyer using artificial intelligence and ask it very detailed questions. It could do a fair amount of research on the internet, or you could if it has limited capacity to engage with the internet to get answers, you can do side research and provide it to ChatGPT to do that kind of rational analysis. Make a lot of progress. First step is to understand what you want to do and be reasonable with why you want to do it, and then find the tools to do what you want to do. Hope that helps. Uniswap v4 could upset some AMMs a bit. Yeah, it's a big deal. And Uniswap is completely dominant um, on many chains. Uh, yeah, Bunny whatever, Bunny v something. I think that is an interesting story of what they want to do with Uniswap v4. I don't think in terms of upset though. I think in terms of who's the leader and how likely are they to continue to lead. For a great example is something like volume on Avalanche. What is the chance that Uniswap is going to upset some AMMs on Avalanche? I mean, literally, Trader Joe's 58 mil, and next up is Dexalot at 4 mil. So about over a 10x the amount of volume in a market that's minus 60% week over week. So volume on Avalanche has completely collapsed. Like this is literally, folks talk about traditional financial collapse in economies and nation states. This is literally a financial catastrophe by nation state definition. Minus 60% in financial activity. Wow. It's a financial collapse. But Trader Joe is dominant. And they have expressed for a long time totalitarian dominance of Avalanche above and beyond. I mean, is Uniswap even on Avalanche? Uniswap is on Avalanche, and they're not even close to even participating. So that's just what it is. Everyone, look, it builds trust. It's entrenched. It has a name. It has a brand. This is where people go. This is Avalanche, Trader Joe. It's a good point, Asher. But there's more to markets than just could. and Woods and upset and oh, it's the best freaking tech in the world. So it's much more than that. A lot of psychology involved. Daniel, right. Hope it helps. Um, Good night. I think that's what the emojis mean. Hey, people could post from Exxon. Hey, if you could post from Exxon here, post your damn comments. I thought you had to go on YouTube to post this stuff. Ah, come on, folks. Get with the program. This is a Q&A type show. Have you looked into F of X? Of course, I know everything about F of X. F of X and the Aladdin team are probably one of the most base teams in the entire Curve ecosystem. They have relatively low market caps, but they have become much more successful with their most recent products. F of X, their most successful product of the entire Aladdin DAO suite. Cleaver isn't talked about, but they have one of the largest VLCDX voting capacities in the entire crypto space. It's quite an extraordinary protocol. So narratives tell you where to look, and then the question becomes, can you get something at a good price? Is there an opportunity from a price point standpoint? Just buy some shit because it's a good narrative. And that's something I remember doing as a kid in like the stock market. Oh, you got to buy something that you use. You got to buy Apple because you use Apple products. That's not how you invest. At least that's not how you invest to be successful. It's the fundamental shit that Buffett talked about a lot. You buy some stuff at a hostile takeover at a discount, and that's why the buying optimally is done after a catastrophe. Just so happens we have a catastrophe in the crypto markets every couple of years. And 2022 and 2023 were great times to buy. And you got to buy things for the right reasons. So you have to determine what those right reasons are, those right conditions. And frankly, survivability is one of the biggest, most meaningful attributes to look for. Hope that helps. Lake, thanks for the feedback. You're very welcome. Asher, last couple comments. We'll wrap it up for today. Regarding trust, I haven't used that at all, but there is Octo, which claims to set up LLC and other business forms on crypto wallets. I believe there's a couple of those protocols. If not, this is the one I'm remembering. There's a couple that are interesting, and even a simple trust is meaningful. And trust, the beauty of them is you get to define the rules, and you get to have a meeting minutes and conversation with yourself, unless you have like a group or whatever, to define rules and behavior. And you literally get a notarization, which means you're creating a program by writing rules. You're getting it notarized, which is like compiling the rules, and then those rules go into the processor, which is maybe a court system at some point, and that is the computer processor. So that's literally just a computer analogy for how the old world works. And it's just an interesting take that I've come to realize of late. Hope that helps. Looks like they have an AI assistant. Oh, great. There you go. This all starts with a conversation about trying to first understand what the hell you want to do and then figuring out how to do it. Totally with you that this is going to be huge, setting up contracts for trust. I think it's a big idea. Whether there's something to capitalize on is another story. But from a structured capital management standpoint, it's very big. So many folks have the potential to manage assets for their family, for their future, for their spouse, for extended family, for their children. And you want to do that in a way that best protects your children. Period. Lake, check it out. Yeah, check out this stuff. The last thing you want to do is own your assets. You don't want to own your crypto. You don't want to own your property, your house. You don't want to own your business. Own nothing, control everything. That's what Rockefeller said 1,000 years ago in relatively speaking. And it's a relatively hot topic nowadays with the WEF saying, "Oh, nothing, be happy." But this is what the biggest business folks in history have said. You don't own anything. Don't have anything in your name, and control everything. And that's how you're able to have the most favorable treatment um, of assets that you control, but you don't own. Hope that helps. Anyway, so these markets are quite volatile today. So you would expect meme coins are going to be even more so volatile. Minus 8%, 10% on Pond. Where's WIF at? How's WIF responding to today's volatility? It's somewhere in here. Here, minus 10% on the day. These are big, it's big volatility. And frankly, from a dip buying perspective, big market cap on WIF. How's that dip looking? It's a tiny little dip. So you think you could get the position size you want for it to go from a 40 bill market cap, a 4 bill market cap to 40 bill to get a 10x after it's done this? It's not the risk reward that I would want to be interested in. I don't think that sounds quite reasonable for 40 bill for a 10x. 10x. You're not turning $100 into $1 million anymore. That opportunity is gone. Um, so just respect the volatility, and we haven't talked much macro for all of 2024 because the markets have been in a position, in a condition that we could talk much more about the markets, our crypto markets. But the macro is always important. And this drives the crypto market. We're so interested in the crypto market, you got to understand why the crypto market responds, how the crypto market fits into the big picture, and why capital would even think about flowing to the crypto markets. And then you could start to get a little bit of a vision for where things are heading. Things are going to probably head into interesting places, considering what Treasury has to do this year. But as will continue to say, the path between now and the destination is filled with giant, giant landmines, like damn yen. Raise the to a tenth of a basis point. The yen is where the hell is it? Oh, I got starting to get tired at the end of the day. Where's the yen? Yen 151. Oof. This is literally like a shotgun to the head of the world. Wow, this is why the market's doing, our crypto markets are doing what it's doing today. That's crazy. It was wow. So we're literally at wick territory from a yen standpoint. We're marginally above the closes on the monthly where the world is freaking out. And that's why the world is freaking out today. And that's why bond yields are at 3%. Selling the bonds because they need the dollars, because the dollars are getting expensive and the yen's not helping because the carry trade is probably still operating in full force. Of course, it's operating at full force. If you can borrow at a tenth of a percent and lend at 5% and 5 and a change% in a money market, everyone's doing it. So the reversal of that will be pretty destructive. Plenty of capital destructive things along the path to the currency expansion cycle. It hasn't started yet. The currency expansion cycle hasn't started yet. Loosening of financial conditions as measured by National Financial Conditions Index continues to loosen. Damn. Wow. That's why they're loosening conditions. Because they understand if they don't loosen conditions, man, this thing's going to get going really bad in a deflationary direction. Starting with U.S. bond yields as the yen, I don't know what the hell, if the carry trade reverses, the bond yields just get out of control, and there goes the Treasury market. And their whole damn mandate is to manage the volatility in the Treasury market because the bonds are money, particularly the long end, the long duration. That's money, and money prints currency, and dollars are currency, and that's the way the world works. Monday, April 1st, 1:02 p.m. Thank you, everyone, for joining me today. It was a nice conversation, a little bit of history, a lot of bit of what's going on in the markets, and you know the deal. Tell everyone to subscribe. Um, Link in the description somewhere, if not in my X profile, for Discord, the most rational community in the entire crypto space. I wish you all a rational day, and I will see you all later this week. Peace.